Advice depends on a complete analysis of all facts and circumstances. Listeners should consult their own financial advisors or do their own due diligence before making any financial decisions. This is Financial Myth-Busting with Don Bennett, where politics and the economy collide.
And welcome to Financial Myth-Busting. We are live today. And, we've got two terrific guests, which I'm really excited about. The first one actually is POLNY. Now, he's going to be at the bottom of the hour. This hour, and we've had him on before, and he's going to be talking about souring on these soaring markets that we've had. So you want to stay tuned because he really does get into the technical. He's exciting and he's kind of interesting to listen to. But he also is a publisher of Gold 2020 Forecast, which I get, and it's a really good piece. So again, that's POLNY. Now, POLNY is a financial trends forecaster and the publisher of Gold 2020 Forecast. If you don't remember from our last interview, he actually publishes 3 reports. The first one is called POLNY's 2020 Gold Index, and that's for the buy and hold gold investor. It's good. I get it. And we also talked about POLNY's exclusive turn dates. Now, this is more for the active trader investor who's looking to keep a pulse on the gold and silver markets on a daily and weekly basis. And then his last one is the 2015-2016 stock market index. Now, the first time point of this index in 2015, that hit a market cycle top, and the second was an important cycle low after the first drop, and the third a critical cycle high and start point for the crash, and the fourth and final index timing point is the 2016 cycle bottom, and I know that was a lot there, but I think that's where I want to start today. Bo, welcome back to Financial Myth-Busting.
Don, thanks for having me back, and absolute pleasure to speak with you again, so thank you.
So I watched you discuss the markets in your most recent analysis where you took on the cheerleaders who were triumphing the Dow and the S&P reaching all-time highs, and you cited something called the megaphone top chart pattern, and you use this to describe the current market moves. For those who have never heard this term before on Financial Myth-Busting, because I've never used it, what does that mean?
Okay, so first off, what you're describing, Don, is a YouTube video that I created. It's on my YouTube channel.
Right.
And so for those listening, please, they should take a few minutes this weekend or sometime in the next few days. Very important. But go watch the video. It's called Chaos 2016. Okay. And my YouTube channel is just our website, Gold 2020 Forecast. So it's a 15-minute video. Very, very informative and illustrative is a good word. In that video, we described what you just mentioned. It's a megaphone top chart pattern. And what it is, it's like a megaphone. That's why it's used that word. Another name for it is a jaws of death. And basically what it means is you have 3 tops, and then there's a top and then a drop, a top and a drop. So basically that would equate to, if you look at the Dow, you had a top in the year 2000 and then a drop into the year 2004. That's the first jaw. Then you have a rise back up to the year 2007, a top, and then a drop down into 2009, and then a third rise into 2015. Now, in July, we called a top on the 20th of last year, and that top has just recently been broken. But the amazing part is, if you draw a line from 2000 and right to the top of our top in the year 2015, with all the wonderful news, like you just mentioned, with the media, the news channels,
right,
how wonderful everything is in the markets. Everything's just fine and honky dory. The world is beautiful, especially the U.S. markets are absolutely fine. Here's the huge problem, Don. The megaphone top is not broken, okay? And what that means is that all we're sitting at is because it took a year longer. So we had, from a mathematical, biblical calculation, it adds a year, a jubilee year. So that was basically the whole hiccup we had here between last year to this year. But between 2015 and 2016, if you take a point at 2015, it's a megaphone, so it's going high.
Right.
So that's why you have a slightly higher top this year in 2016, but it's nothing but the end of the end of the end. And so all that happens from here is the bubble bursts and then just chaos. So that's in essence what's happened. And then I last couple interviews we've done, it's been interesting because last year I know we did an interview at the end of the 2015, and then I think a few months ago we did one too. But I know when you were talking to us or we were speaking with you, it's amazing. But our stock cycle has had 36 incredible turns since the year 2015, November of 2014. And all that's changed is an inverted cycle to complete this final push up that started in the very early part of March of this year, 2016. So you push a 6 to 7 month cycle, and all you get into is the end of August and into September. And come September, it's going to be bad. People who are in the market, this job pattern, the megaphone completes, and then you get collapse, you get chaos.
All right, so let's talk about that chaos. You're anticipating it in September of 2016. Is that correct?
Yes, because the top is because the higher high just came in, megaphone's unbroken, and then on top of the megaphone pattern, see, the U.S. is the only pattern that's stronger, that's creating that megaphone pattern. So we look at that pattern specifically. You can look at it on the Dow, you can look at on the S&P 500, on the Nasdaq, on the Russell, and the pattern's unbroken. And so the megaphone's unbroken, and all it is sitting just at the upper cusp of how high it could go.
But
the other world markets. Go ahead.
Are getting beaten. But, my point, but the other very difficult part for all of our listeners out there is you hear Obama and the media, and they're constant, even Yellen, right? They're constantly saying that the U.S. economy has never been stronger. And then at the same time, you're sitting here telling us that, the market has yet to break this megaphone top chart pattern. I guess my question is, why is that significant?
No other world market has even come close to the high of last year of 2015. So when we called China's top in April, May of last year,
that's right,
day,
yeah.
I think within 2 or 3 days, and not one other world market in the entire world, whole world, has even come close to the highs of 2015. And so because the U.S., the U.S. they print money, it's just a button you press, and so their markets can be stronger. But the problem is, it gets to the point of exponential growth. And at some point, you just can't keep printing money anymore before the bubble bursts. And so when I look at the patterns and more the going back historically, it's insane. But I've got, if from the year zero, you add 252 years times 8, and you arrive at 2016 this year. And people may not know what that means, but that's a biblical calculation. And so everything is pointing to you can't go past this year before the bubble bursts. But the problem is, I believe it's going to be based, they can keep propping it up, and like they've been doing and pushing it higher until the dollar breaks. When the dollar breaks, because it's the de facto currency of the entire world, okay, it's going to take out every single paper asset with it downwards. And so between now and next few months forward, we've got chaos coming. When that dollar breaks, the stock market breaks, every paper asset breaks. And I think we're going to be able to look back at this in several months, several years, a year down the road, and we'll know that the month of September was the month that the whole world changed. And then it all just turned down. But it's not going to be like slowed on,
right? Because
the problem is, it's they printed so much money, and it's a bubble that bursts, and all you get is like fragments. It's just going to explode, and it's going to be terrible.
Right. So let's talk about that, what you call an explosion or collapse. You recently wrote there appears to be a 42-year cycle at play, where we had a depression in 1806, and then the 42 years later we had another in 1848, and then 42 years later than another, continuing along until 2016. But there's only 3 months left in 2016. So do you really expect everything to explode, collapse so quickly?
Yes. Yeah. It doesn't mean the bottom's going to come in 2016. The bottom could come in just like you look at in the year 2000, even though this will be not much quicker. Mm-hmm. But, the year 2000, the bottom took 4 years to come in. In the year 2007, it took a year and a half for the bottom to come in. Down to the lows from the 2007 top. So don't be surprised that it might take a few months, but the initial shock wave is going to be just horrendous, and then it'll be too quick and too fast to react. That's the problem. So people who are not positioned, I just don't think they're going to have time to react. And in my charts that I'm looking at, especially which we've got in the stock index, the site we have a cycle time point, which is the final, basically day or two to act, and after that day, I think I'll send you the patterns, and you'll see it's just straight down.
Right.
So it could be really, really, really bad.
I don't really like to work day by day, but here we are on the 26th, heading into September 1st. Do you have a daily prediction for September for our listeners?
Well, without giving out the exact dates, because we give that to subscribers,
Right.
I will say that, in the subscription, of the the stock index, we actually have a final time point to, before, all pandemonium is supposed to break free. And then same, and then when that happens, you have to remember, what is the one asset class that's not paper? You've got, gold and silver. So, we nailed the bottom, but that's just a warm up. We've had 9 or so months of warm up of a little slightly pushing higher prices. But when this bubble blows, don't be expecting to see slow moves. Everything's going to be very dramatic. So between, today and the end of August, boy, come September, we've got a turn point, and it's going to be very dramatic, between all markets, gold, metals, stock markets. A lot of things are going to start to change. And you're right, Don. There is not a lot of time left between this time point and year end. So we're really getting into crunch time. And like you said, that if you look in the video that I've laid out there, that 42-year pattern, it's unbroken, going back to 1764. It's a 42-year crash cycle that occurs every 42 years, and then that's overlaid on the bigger cycle. You can start at the birth of Jesus, which would be 0, and you add 8 cycles of 252 years, and you again arrive at the year 2015. So I believe what we're about to see here is something the world has never seen before. Because when a world currency gets smashed or gets hit, it's just something the world has never experienced, and this is going to be just catastrophic.
Yeah, let's talk about that. The gold market, which are the gold and silver, I can consider a currency. But you're not talking about gold and silver as a currency getting hurt. You're talking about paper, fiat currency. And I think the gold market, of course, is so interesting because how the price can be distorted through the buying and selling of paper gold, as in a future sale or purchase of gold. In fact, I think 500 ounces of paper gold are being sold for every ounce of actual physical gold available out there. Is this different from other commodities? And if so, how is this all affecting the actual value of gold today?
Well, if there were no 500 to 1 ratio right now, if they didn't print 500 pieces of paper for every ounce of gold, you'd have, just as a fun guesstimate, you probably have gold 500 times higher. So it's a paper game to suppress the price of precious metal, because you can print as much paper as you want, but there's only so much physical available. That's the problem. But eventually, it's like it's that point of everything ends. Like you can't to believe that something's going to whatever event you're thinking in your head, that event's going to go on forever. It's no possibility. It could go on for 100 years, or 200 years, 3,000 years. It can go on for 2016 years, but eventually that has to burst. And so what's basically happening here is it's kind of like we're at a finite point, and all I know is that it's the patterns are unbroken on the stock market and on gold, or charts we've got. So nothing's broken down, at least at all. And all I know is that the mathematical calculations are pointing towards chaos like this year, and we're really, really tight on time. So if they've printed that amount of ounces of gold, all that's done is it creates what's called a flag pattern. So the price goes up from 2000 to 2011, makes a high just over $2,000, and then it drops from $2,000 when we call the top, and it's been going downwards for 5 years, and now it's getting to a point of where they can't push it down anymore, no matter how much paper they're printing. And so even though they throw billions of dollars at it, gold drops $10, $15. You see, it's not working anymore, and eventually it's just going to burst, and it blows, and then it just goes vertical, and then you're going to have massive price moves in gold and silver, because neutrality has to be found, and that's not with gold at $1,800 or $1,500. Gold has to get above 2,000 and quick.
So, Bo, is that your prediction that there's going to be a breakout to 2000 and 2016? I mean, if your forecast proves true.
Yeah, well, absolutely.
And what about for silver too? Try to get to that too.
Well, silver is going to be more powerful because of the ratio. You see, in ground, silver's 10 to 1. Mm-hmm. And so right now they printed, the ratio is 70. I don't know currently, but I'm guessing around 75, maybe 70 to 1 right now. So for every ounce of gold you buy, you can buy 70 ounces of silver. Right. But in ground, it's 10 to 1 approximately. So if gold doubles, silver is going to go quadruple. So don't be surprised if silver gets to $60 quickly. So when this bubble bursts, it's just going to blow, and then silver and gold are going to go vertical. Silver is going to outperform. However, we have a high coming in next year, 2017, for silver and for gold. But silver, like gold, just from a mathematical and from a cycle point, gold bottoms first, silver bottoms second. Silver hits a top first, and then gold hits a top second. But we do have big prices still for this year because it's going to be breaking out and going absolutely powerfully vertical. But then that won't stop until next year. And then we got a specific time point for that as well, too.
All right, Bo, so we're finishing up this first segment. I want you to stay with me because I do want to talk about the price you see in 2017. Stay tuned. This is Dawn Bennett with POLNY, and Bo, we're back, and I wanted just to talk a little bit more about where you thought gold was going to go as a price tag and silver as a price for 2016, because you said there was going to be a vertical breakout, as well as the timing and the price of what you think for both those commodities in 2017.
Well, we did an interview about a year and a half ago or so, and we were calling for 3 digits on silver this year, possibly 2016. Wow. Because now, again, I need to talk about that for a second because the pattern that we've had, we were supposed to be more. See, what happens with gold and silver, the patterns we have don't give specific prices, but they give direction, right? And so the patterns we've had have been playing out incredibly accurate. It's been, since we called the bottom in December of 2015, the pattern's been playing out beautifully. So there's nothing wrong at all. Only thing we're still not above, say, $1,500 on gold. Right. And so what we're seeing right now is when this when initial thrust goes through, we should be at 1,500 pretty quickly, and then we should be by year end easily into new highs for gold and for silver. So silver should be above 50, and gold should be above 2,000. Now, again, it could go higher, but because we've had the 6 months of pattern, since March, the markets haven't crashed. We had the 6 to 7 month cycle inversion into now September. Now that pushes the cycle possibly 6 to 7 months forward. So we're still looking into, between now and without giving out the time point for next year, but we do have next year. I see no reason why silver would not be at 3 digits by next year. And I'm definitely, being very clear, not talking about end of next year. It's far earlier than that.
Let me ask you something. I was reading that the Federal Reserve expects the 2008 rates to be someplace between 0% and 4.5%. Now, how on earth anyone can actually do any type of capital allocation decisions on a forecast like that with guidance from 0 to 4.5. What it's saying to me is that this wide range is indicating that they're going to be raising rates. As a matter of fact, I think Stan Fisher this past week, basically spoiled a run up in stocks and bonds and even gold and even the dollar, stating that Yellen's comments are pretty much consistent this week with possible September hike. Can you factor that into what you think gold and silver are going to do?
Well, we've got right now gold has been falling. We did a post last week in multiple websites. We were basically talking about gold going down this past week, and you've basically seen gold go down this whole past week, with silver. So we have a down cycle for gold, but when this cycle ends, and it's not too far off into the future, we're talking short time, a bottom is going to come in and then it's going to reverse. The reverse will be powerful to the upside. But yeah, so yes, I've looked at the rate hike, and I think there's going to be a lot of issues at that time point. It doesn't matter what anybody wants to believe of what they're going to say. Right. All I'm saying is that gold is going to be going up this year, and it's going to be powerful. So whatever they say, it's going to be bullish for gold. And it doesn't have to happen right away when they speak, but the point is metals were not going to look back after this final low comes in here in the near future. So metals are up, markets are supposed to be turning down, and so it's going to get ugly. And I believe the September time point is going to be very critical. So what they say there is going to be very, we've got the patterns already into the charts, but it's going to be a critical inflection point, I think, in our world.
But we have about a minute and 15 seconds left. And I just wanted to ask, some of your forecast incorporates biblical numerology. And I'm wondering, do you ever fear that these market predictions, when you talk like that, won't be taken as seriously if it's not based on some hard science of modern market algorithms?
That's the beautiful part. See, I could care less what the algorithms are saying or what the new system, because eventually what happens is everything's going to play into the cycle. So the markets will turn exactly as the cycles are forecasting. The cycles precede all those events. And so it does, and because you can see a cycle before it happens, you can know, like right now, we know the day, right now we are short the precious metals still, and we have a day that we're going to go long. And eventually the indicators will turn positive, but right now the indicators are negative for the precious metals. So it really doesn't matter because the cycles are basically nothing more than people acting into the cycle. And so the cycles are already foretold, and they're biblically foretold. And the problem is, from a biblical standpoint, there's a lot of problems coming into our world, and nothing's going to change. This has been predetermined thousands of years ago, and all we're trying to tap into here is what's been predetermined thousands of years ago, and it really doesn't matter what anybody thinks.
Hopefully you caught that. He has a very interesting take on gold and silver, and he is a publisher of a Gold 2020 forecast, which is what I get, and it's really good. So if you have any interest in that, all you need to do is let me know, and I will actually get you all that information. That's all I've got. This is Dawn Bennett with Financial Mythbusting, where the economy and politics collide.